What is up, investors, and welcome back to the Everything Crypto Show. I am your host, Everything Crypto, here to bring you the latest and most important news moving the crypto markets. Now, as always, please remember that nothing on this channel is financial advice. These videos are for viewer education and entertainment purposes only, so please invest responsibly, and I love and appreciate you all. And on that note, we have a ton of content to get through today, including a major reversal from Bitcoin and the crypto market as a whole. Crypto.com once again making changes to their crypto earn platform, as well as a key series of updates on these other centralized exchanges like Celsius, Voyager, and Vault, who are all insolvent or close enough to it. So if you guys have not yet hit that sub and like button, please consider doing so. It costs you guys nothing, and it does mean a whole lot to me, especially if you are a crypto investor. We pretty much bring you all the news on a daily basis that you need to know to keep up to speed on exactly what is going on in the markets. So without further ado, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Now, taking a look here at the Bitcoin chart for starters, you can see that we've had that nasty reversal from 22.3K, and I was calling for this over the past couple of days. You can check the videos. They are there, time-stamped. We said that until Bitcoin can actually make a convincing break above that 22.3K level, which is aligned with the 200-week moving average, I am not taking any move on Bitcoin to the upside seriously, and that is how these whales and these market makers do actually catch people holding the bag. I mean, you see a move like this from 17.5K all the way up to 22.3K, and that is about a 23% move to the upside, which does tend to make a lot of people flip bullish. However, we are still below all weekly moving averages, and it looks like we are just on the verge of actually breaking below that 2018 all-time high of 20,000. Now, taking a look at Ethereum here, Ethereum is now painting the same picture, and it is even a little bit uglier on Ethereum side. As you can see, the all-time high in 2018 was 1,400, and ETH is currently sitting at 1135, not even close to its all-time high in 2018. It is also now below that 200-week moving average, so ETH is looking slightly more bearish than Bitcoin, and that is a function of the bear market of the ETH versus Bitcoin valuation, which we have discussed on the channel multiple times. As in a bear market, Bitcoin does tend to outperform Ethereum, and you can see that represented here by this massive landslide that began really at the beginning of May. We did see some relief at this long-term trend line of support. However, I would expect that in coming months, as the bear market ensues, that Ethereum will once again break below this level of support, and along with ETH versus Bitcoin breaking down, that also means that Bitcoin dominance should make its way back up to the upside. Now, we're going to take a look at some of the macro events that we definitely need to be aware of, and for starters here, you're going to notice if you look today at all at Forex, you would notice that the euro is now on par with the US dollar for the first time since 2002. And a little fun fact is the Fed was actually cutting rates during this period in 2002 in the wake of the dot-com bubble burst. And now we're sort of in like the opposite environment where the Fed is actually raising interest rates as a result of what I'm going to call the fake stimulus COVID bubble, okay? All that fake money that was printed into thin air is now coming back to bite us in the ASS, and that is a result. And I mean, really, the economies all around the world are weakening. It is not just the States, it is not just Canada. There is really a widespread ripple effect of weakness going around at the moment. Now, we also saw Peter Schiff here, the biggest Bitcoin bear I have ever personally come across on social media. I mean, this guy takes every opportunity he can to fearmonger and say that Bitcoin's going to zero and that if you put your money into this, you don't know what you're doing and you deserve to lose your money. So honestly, the fact that this guy had his bank actually seized is definitely unfortunate, but at the same time, it is ironic that the one thing that could have actually protected him here is Bitcoin, and it does look like maybe Peter Schiff is starting to acknowledge that he was wrong. And I always knew that Peter Schiff would eat his words one day. I just didn't know that it would happen so soon. So he basically is trying to defend himself here, saying that his bank was not put into receivership for being insolvent. It was put there for being undercapitalized, not having no capital. My bank has about 2 million. Okay, he's just talking about how much money he has. Who cares? And then someone said, are you willing to sell the bank for Bitcoin? And Peter Schiff responds, actually, yes. I would sell the bank for anything if regulators let me sell it. My main goal is protecting customers. So pretty much like, a half-ass way of admitting that he would actually accept Bitcoin for his bank. He didn't want to go ahead and say it outright, but I mean, he kind of did here, saying actually yes. So Peter Schiff literally eating his own words after being such an avid Bitcoin hater. And obviously, while this whole scenario is unfortunate, I mean, it's kind of ironic to see him actually just admitting that. So now taking a look here at this very interesting chart from Trading Tom on Twitter, and basically what he's saying is that since we've been in the bear market, it has used double bottom breakouts as traps, and every one of them have essentially caused the next leg down in the market. So you can see here that since really the beginning of December, when we did start this downslide, we saw a nice double bottom here, move down, nice double bottom here, move down, another double bottom, move down, another double bottom, and this is now the 5th time this pattern is playing out. Now keep in mind, this was actually posted on July 10th, and this is actually being recorded on July 11th, and today we actually had yet another red day in the markets, so it does look like at the moment we are actually experiencing a continuation of this pattern. And the reason this is relevant is because this chart here is tracking the NASDAQ, and as we all know, the NASDAQ does move in high correlation with Bitcoin, which in my opinion does not make any sense, and I think as Bitcoin does become a mature asset class, that it will not trade on par with these tech stocks, but at the moment it does. So if the NASDAQ does want to move down, the chances are that Bitcoin will be joining it. Now we need to talk about Crypto.com, as once again, they have actually gone ahead and updated their crypto earn rates. I feel like we made a video about this like not even 2 weeks ago, as that was the last time they did change the crypto earn rates, and they are back at it once again today. And they did this again where they did like an effective immediately announcement. And to be honest, this is the one thing that I do have to nitpick when it comes to Crypto.com. You guys know that I am a massive CRO bull. I love the Cronos chain. I love Crypto.com as a platform, but I am not here to shill. I am here to give you my unbiased opinion. And one thing that Crypto.com absolutely needs to fix is their PR, honestly. Like, you can't just be dropping these changes on people and announcing them effective immediately. I don't think that is fair to the community at all, and I do think they should really try and provide like a little bit more of a heads up, right? So basically, they have announced revised rates for select stable coins, and in the last crypto earn update, they pretty much nerfed all stable coins except for USDT and USDC, and as well as DAI down to 3% APY. And people were wondering, why did you actually exclude those 3 stable coins? Well, it does actually look like they are starting to pay attention to these 3 stable coins, and they have effectively neutered the rates here. So if you actually have a CRO lockup of 4,000 USD or more, you used to be eligible for 8% on USDC, USDT, and DAI, and that has now been reduced down to 6.5%. Now keep in mind that this 6.5% is only if you are within the tier 1 quota, and what this new tier system is essentially anything that is locked in crypto earn equivalent to or less than 3,000 USD in value is eligible for the tier 1 quota. So if I locked up 3,000 USDC in crypto earn, I would be eligible for this 6.5%. However, anything above 3,000 USD is actually suspect to tier 2 quota, and what this is, tier 2 is essentially half of the full rewards rate. So if you are netting 6.5% on 3,000 USDC, if you were to just make this 3,001 USDC and knock yourself into tier 2, that 6.5% would actually be reduced down to 3.25%, and that is going to last you everywhere in tier 2 from $3,000 to $30,000, and then everywhere upwards of $30,000 is subject to tier 3 rates, which is 0.3 times the tier 2 rates. So basically, the more you have locked up, the reduced rewards are going to hit you more and more. And once again, I do believe this is very important for the long-term sustainability of the platform. Now, we've really been talking about the sustainability of this platform since they started announcing these crypto earn changes back in March. And one thing that I do really want to note here is just the change in tone from the community, okay? Because when they were first announcing these changes in March, this is before all these exchanges started falling apart. People were saying, I'm taking my money to Celsius, I'm taking it to Voyager, Crypto.com does not care about their customers. And now that people have begun to realize that the rates being offered on these platforms were just simply not sustainable, people have actually been a lot kinder towards these Crypto.com changes. And I think that is because people are finally starting to recognize that they really are doing what is in the best interest of the customer, and that is to ensure the long-term sustainability of the platform, okay? They were offering 10, 12% on stablecoins not even 6 months ago. And what good is 12% if the platform isn't even around anymore, okay? So To put things into perspective, I honestly see these crypto earn updates as more of a positive now than a negative, as to be honest, for starters, guys, you can earn a lot better yield if you're just a little bit more savvy with DeFi. If you guys do want to see more DeFi tutorials, let me know in the comments down below, but I have nothing locked up in crypto earn anymore. Anything that is staked is in DeFi, and if it is not staked, it is in a cold storage wallet, and that is just to truly protect my assets, okay? And I highly recommend that everybody else does the same. No links involved here. I'm just saying this for your own benefit. But yeah, more changes to the crypto earn platform. Do I think it will have any meaningful impact on crypto.com or on CRO itself? No, because this platform has so much going on for it outside of crypto earn, including crypto pay, the crypto.com NFTs, the exchange, the main app, and you cannot forget those shiny metal visas that are still incredibly attractive even after the changes that were made to those. So if we want to, just kind of take an example of what crypto.com is exactly trying to avoid, then we're going to get right into that. We're going to talk about Celsius, Voyager, and some of these other exchanges here who are just simply not responsible with their funds, and this is the outcome of that, all right? So for starters here, Celsius, we talked about them a couple days ago as they actually completely paid off their loan to MakerDAO. I believe that they basically got back to something to the tune of just under 30,000 Bitcoin, worth 453 million in collateral last week, and now it would appear that they are actually deploying the same strategy over with the loans that they had at Aave and Compound, as they have actually dropped their debt down to 123 million following a string of repayments in the last 24 hours. And Watcher.guru here on Twitter did actually go ahead and give you all of the Etherscan transactions to verify it through on-chain data. So the transactions combined a total 113 million, and they are now 123 million away from fully clearing its debt and freeing its collateral. So the only thing that I do have to kind of say here is it can be seen as a positive, as you can basically perceive this as Celsius actually paying off their loan so they can finally begin to pay back their users whose funds have now been locked for 30 days. However, the one thing that I am a little bit concerned about here is if Celsius did actually have this funding available, why would they not have been paying off these loans earlier, unless they were just really incredibly irresponsible and did not really prepare themselves for a bear market. But the only thing it makes me a little bit worried about is Celsius using their own funds to pay off this debt, or are they actually using their users' crypto that they have locked up to pay off their debt? Nobody knows yet exactly where this money is coming from, and that is the next thing that I would really like to see from Celsius. And I really do hope that if anybody has their funds locked on Celsius, that they do get that money back. And now likewise, we need to talk about Voyager here, which has actually updated their customers on their refund plan, and suffice to say, people are not very happy. So after filing for Chapter 11 bankruptcy, Voyager has actually made an official statement as of July 11th. So basically they talk about here how on July 5th they did file for that Chapter 11 bankruptcy to actually create a path to resume account access and return value to customers. So how does the reorganization process impact your cash? They are working to restore access to USD deposits which belong to customers, and we'll go back to those same customers. I don't think people are concerned about the deposits, more so the withdrawals actually. So is my money safe and will I get all of it back? Customer USD is held in a special type of bank account that is called a for benefit for customers at the Metropolitan Commercial Bank of New York. And basically it is FDIC insured of up to $250,000. However, where Voyager got a little sneaky here is they basically made it sound to their customers like your money in Voyager would be FDIC insured in case there were any issues at Voyager. However, that is not the case. You are only actually FDIC insured if the Metropolitan Commercial Bank of New York goes under, which is where Voyager is holding their cash. So it says here, FDIC insurance does not protect against the failure of Voyager, but to be clear, Voyager does not hold customer cash. That cash is held at MCB. So basically, the next question here, why did your website change the way it talked about FDIC insurance? Because the way they worded it was incredibly misleading and a little bit malicious in my opinion, pretty much giving customers, making them feel like they have this safety net when really they did not, because now Voyager is insolvent, has filed for bankruptcy, and clearly your funds were not FDIC insured. Otherwise, they would be completely safe. And that is the problem here, was just the wording. They really took a backhanded approach here that I do not like or trust whatsoever. Now, what is the refund plan? And this is what is really upsetting people, is, to be honest, this is complete garbage, okay? So Voyager currently has approximately 1.3 billion of crypto assets on its platforms, plus claims against Three Arrows Capital of more than 650 mil. And let's be real, they are not getting this money back, as we actually did get news today that Three Arrows Capitals are not cooperating with liquidators. Whereabouts remain unknown. So Three Arrows Capital founders are on the run. They are not cooperating with these liquidators, and they are in hiding. So I highly doubt that they have any intentions of paying back Voyager. So Voyager has proposed a reorganization plan that was presented on Friday, which is subject to change and requires court approval. But basically, customers will receive a combination of the following: a pro rata share of crypto, pro rata shares of proceeds from the Three Arrows Capital recovery, from the potential, not likely, Three Arrows Capital recovery, pro rata shares of common shares in the newly reorganized company, and pro rata shares of existing Voyager tokens. So effectively, if you had 3 ETH on this platform, you're not going to get back 3 ETH. You're maybe going to get back 1 ETH plus a bunch of Voyager shares plus some Voyager tokens. And to be honest, this just seems like an absolute cop-out way to pay back their customers. And I can pretty much guarantee you that if they're giving people back Voyager tokens in exchange for like Ethereum, then Voyager is just going to dump, because I don't really think many people want to touch Voyager after what has happened. And even for those people that do, nobody likes to get crypto forced on them. So if I had 3 ETH and I only get 1 back and a bunch of Voyager, you better believe I'm selling that Voyager token to get my Ethereum back, and then getting all of my crypto off of that platform ASAP. So I honestly just think this is still going to lose people money. They're just really trying to save themselves money here, as they can sell common shares to dilute shareholders, and they could potentially just sell more Voyager tokens if they have to. So can you tell me how much of my crypto I'll get back? At this stage, we are proposing customers will receive their crypto as described above. The exact numbers will depend on what happens with Three Arrows Capital. So they are definitely trying to issue a lot of the blame here onto Three Arrows Capital, and obviously Three Arrows Capital is partly to fault here, but at the end of the day, it is really nobody's fault except for Voyager's, because they did choose to give that loan up to Three Arrows Capital without their due diligence. And obviously this plan is subject to change, okay? So this definitely could change, and based on the backlash that the community has sort of given from this update, maybe they will change it. I really hope they do. And once again, just like Celsius, if any of you have your funds locked on Voyager, I do truly hope that you get them back. And that is going to conclude all of the news that we did have for today's crypto market update. As always, I wish you all remain happy, safe, and healthy. Catch you guys in the next one. Peace out for now.